After taking thousands of fair value gap trades at this point and seeing results like these on a daily basis, primarily trading the fair value gaps, I'm going to give you a no BS guide to fair value gaps that's really going to revolutionize your trading. Before we get into the video and I uncover all the gems that I know, make sure you guys are following me on Instagram if you haven't already. First premise that we're going to talk about is narrative, and how we identify narrative is through this one quote. So take notes. When the higher time frame order flow is bullish fair value gap should be respected and bearish fair value gap should become inverted. And when the higher time frame order flow is bearish fair value gap should be respected and bullish fair value gap should then be inverted. And with that quote out the way, you have to understand where you are from a higher time frame structure. So as you can see in the first depiction here, we've been making lower and lower and lower prices. So we're respecting bearish fair value gaps until we reach a level of demand here or some type of support level to then see this push to the upside, breaking structure higher. So now this bearish fair value gap then become an inversion fair value gap, as well as the bullish fair value gaps to then propel us higher into our target. Vice versa can be said about the bottom, where we've been seeing higher and higher prices until we reached a top level to where we went lower. Now this bullish fair value gap then becomes inverted inside of this bearish fair value gap to then see us making lower and lower prices respecting bearish fair value gaps. Too many traders take fair value gap trades blindly. Not every single fair value gap is going to hold because the algorithm is simply not in your favor. And to identify when the algorithm is in your favor, you have to understand these two basic principles. What is the current trend of the marketplace and where are we reaching up or down into? That's it. That's all you need to know. Have we been making higher and higher prices, and is the higher time frame trend moving higher, and do we have a clear draw on liquidity reaching up into those higher prices, or have we been going lower and lower and the higher time frame trend is lower, and do we have clear targets that we're reaching down into? To identify the trend of the marketplace, we have to identify breaks in market structure. These are shut-in shifts to the upside or the downside, creating newer highs and newer lows inside of that structure. So as we can see here, we've been shifting higher and higher until we reach up into this buy side liquidity pool. So until we reach up into this buy side liquidity pool, we want to be then looking for bullish fair value gaps into that target. And then as that higher time frame target has been met, which is this buy side liquidity pool, we then seen this shift to the downside. Right here, breaking structure, taking out this liquidity pool. Now the algorithm is shifting from bullish order flow to now bearish order flow. So as we can see here, we can take shorts inside of bearish fair value gaps until we reach down into these lower levels here by this low and this low. And to identify the targeting, we have to use the framework of liquidity. Do we have highs and lows inside of the marketplace? Whether that be equal highs and lows, prior daily or prior weekly highs and lows, or prior session highs and lows inside the marketplace that we can clearly identify that we're reaching into. So let's say this was a prior daily high. As you can see, we've been breaking structures to the upside, reacting off of bullish fair value gaps until we reach up into that prior daily high. Now we see that rejection from it, breaking structure to the downside. Now we're taking bearish fair value gaps, aiming for these prior daily lows. Using these two basic principles of structure as well as having a clearly defined target will eradicate 90% of your problems when it comes to choosing the highest probability fair value gaps inside of the marketplace. Bonus tip I want to give you guys is the higher the time frame, the better the quality of that fair value gap will offer. Let's get into some charts and break this down. So coming into the marketplace here on the 1 hour, we can clearly see that we have been making lower prices until we reach down into this support level, which is identified by this rejection block. By the lowest body close to the lowest wick, this is a support level. We come down into that support level following that bounce to the upside. So now order flow in the marketplace has then shifted from bearish to now bullish. And as you can see, from that shift from bearish to bullish, we're reacting off of this bullish fair value gap here on the 1 hour, breaking above this bearish fair value gap. And as remember, I said bearish fair value gap should now become inverted. And as you can see, we break above that inversion fair value gap, come back down into that inversion fair value gap to then offer support to then see that push to the upside. So again, bullish fair value gap, found that support to then see that push to the upside. So now we can clearly identify, okay, the trend is higher prices. Now we need to identify, are we drawing up into a liquidity pool? Where are we going? And as we can see, we can clearly define 1 liquidity pool, 2 liquidity pool, and 3 liquidity pools that the market can reach up into. Coming down to a 15-minute time frame during that New York session, I'm trying to identify, is there any bullish fair value gaps inside of this level to then take us up into these liquidity pools. And as we can see, we can clearly define this bullish fair value gap right here. So as the market opens, I want to put a limit order inside this bullish fair value gap, stop loss just below this low, and I want to aim for a 2-to-1 R back above these liquidity pools. First, I identified the trend of the marketplace. Where are we from a structural standpoint on the higher time frames? Then I identified, is there a draw higher? We identified these liquidity pools as a draw on liquidity to the upside. So now coming into the lower time frames during the time that I'm trading, which is the New York session, I'm trying to take a bullish fair value gap into those levels of targeting because I understand the premise that I've just outlined. So let's see what happens. We come into that bullish fair value gap, and then we eventually reach all the way up here into our targeting. Using this two-step framework, literally two-step framework, we eradicate 90% of the problems, 90% of the issues, which fair value gap is going to hold, which won't, because we understand the higher time frame is king. So if we can be aligned with that higher time frame trend, it eradicates and makes it so simple. Let's get into the next example. Coming into our next example here, we can clearly define that we have came up higher and took out this buy side liquidity pool. Following that break of the buy side liquidity pool, we then seen this massive structural shift to the downside, breaking below this bullish fair value gap. Remember what I said, bullish fair value gap should now become inverted. We understand the higher time frame trend is now lower, shifting from higher to now lower prices. We have our clearly defined targeting down here. This liquidity pool, these equal lows down here, as well as this low right here. These are our areas of liquidity that we want to see the market then draw down into. So coming down to the 5-minute time frame, we can clearly identify this bearish fair value gap level, which is nested inside of this higher time frame bearish inversion fair value gap level with clear draws on liquidity to the downside. So we've identified that higher time frame trend. We have clear liquidity pools below us. Plus, we've seen that we had that market structure shift to the downside, respecting bullish fair value gaps to now respecting bearish fair value gaps. So as price comes up into this level, I'm more than anticipating price to find rejection here to then see that continuation to the downside. So I can put a limit order here at the opening of that bearish fair value gap, stop loss just above that bearish fair value gap high right here, targeting back below these lows for a 2-to-1 R. And let's see what happens. Price comes up into that bearish fair value gap level, just like so, down into our target. Let's say you didn't get inside of this entry. Well, price action gave you another entry right here inside this fair value gap to then get inside of the marketplace to eventually reach even lower. So we've identified that higher time frame trend. We had that clear draw on liquidity to the downside. We've seen that structure shift on the higher time frame. So this made it even more easier to take this trade on the lower time frames because we were understanding of that higher time frame. And back to the higher time frame here for gold, we can clearly see that we came lower, taking out liquidity. Following that liquidity sweep, we see this break of structures to the upside. Very good signature that we want to see, indicating the market shifting from lower prices to now higher prices. And as we can see here, we had this bullish fair value gap. Price came up into it slightly, giving this push to the upside. I'm not worried about this bearish fair value gap, and honestly, I'll even look for longs breaking above this bearish fair value gap. And why am I so confident that price will break above this bearish fair value gap is because I understand the higher time frame trend, the higher time frame structure. Plus we have this draw on liquidity here, which is the prior daily highs. The prior daily lows is all the way back down here. You have to understand which is more easier. It's much easier for the algorithm to come up here and take out this buy side liquidity pool rather than coming all the way back down here to take out this prior daily low after it's already took liquidity and broke through to the upside. Our dealing range is from this low to this high. Price is not going to come back down into this level to then take out this low. We clearly swept liquidity and broke just to the upside, so obviously it's gonna try to find support inside of this upper level of this dealing range to then come back above these highs. Now coming down to the lower time frames, we're identifying this bearish fair value gap, which I'm anticipating to then become inverted. If we can push up higher, breaking above this bearish fair value gap, I would then look for longs to then reach up into this level, and we can identify this 15-minute bearish fair value gap inside of that 1-hour bearish fair value gap. So I'm anticipating price to close above this 15-minute bearish fair value gap to then invert it for that support to push higher. Let's see what happens. Price then breaks above that bearish fair value gap. I'm going to put my limit order here at the opening as we come back down into it. Stop loss below that inversion fair value gap, targeting back up here for a 2-to-1 R. Let's see what happens. Price comes down, taps us into our trade, and we eventually reach up into our target for that total 1R using that inversion fair value gap. Using the example that I mentioned, right, when an uptrend, price should break above these bearish fair value gaps and use them as support. So making that analysis from the higher time frame allowed us to get a clear example of where we are in terms of market structure, so we didn't get faked out on the lower time frames. And this is how you properly use top-down analysis and how you properly use fair value gaps to your advantage. I hope you guys learned a lot from this video. Make sure you guys are liking as well as commenting what you guys want to see next. I'm Markham. Be safe. I have released my private mentorship where I give daily lessons on technical analysis, fundamental analysis, psychology, risk management, as well as live trading and much more for your trading success. If that's something you guys wish to check out and want even more content and gems from me, not shared anywhere else, it will be the first link in the description or the first link in my Instagram bio if you wish to follow me on there as well, at Arkham Trades. Thank you for watching.